Guys, it's official. Tokenization, specifically tokenization of RWAs, real world assets, is here to stay. I know that when the market ran at the start of this cycle, the word RWA was a hot narrative and we never really got the kick on from RWAs in terms of the narrative and speculation around it. But when you look at the inner workings of this industry, RWAs are arguably the best use case of the blockchain. And in this video, I'm going to try and explain why. I think the easiest way that I can explain this is by talking about the biggest RWA that we have that a lot of people wouldn't think and classify as an RWA. Because when people start talking about real world assets, they're trying to tokenize everything. Property, I don't know, just watches, diamonds, all of these kind of assets, and they all have a place. But the biggest RWA that we have seen and continue to see is stablecoins. Stablecoins are literally tokenization of a real world asset, and that real world asset is fiat currency. And if you start to dive into the numbers, stablecoins are at all-time highs in terms of holding. There's billions of dollars of stablecoins being printed and minted, every week. And that means that for $1 billion that's been minted, there's $1 billion worth of fiat currency in the real world that has been tokenized and now is being represented by this digital form. And I've seen the effects of stablecoins and how positive they are in my own life and how impactful this tokenization has been. If I work with someone and they're in a different country to me and I want to pay them, rather than having to spend 30, 40 quid on a bank transfer and then it taking 48 hours to get to them, it's instant pretty much and costs, depending on what chain you use, a couple of cents, if that. I mean, that's the greatest example of tokenization, but now we're seeing it being entered into different conversations, and I want to kind of break that down as well in this video. So one big thing that I think is going to kind of kick RWAs back on is that the conditions are just favorable for RWAs. There's regulatory frameworks that are coming into place that are essentially allowing RWAs to gain a strong market position. There's huge companies and institutions worth billions of dollars that are starting to tokenize real world assets. And of course, we have a pro-crypto and tokenization president in the US. I almost forgot about is technological advancements. There are so many great chains now that can offer really fast, quick, and secure tokenization of assets. And by doing so, they enable this process of tokenization to be simple and cost-effective for users. So we're now in a position where maybe if you put the clock back 3 years and Ethereum is the main chain and we're tokenizing real world assets, but there's transaction and gas fees of $50 on a transaction, it makes zero sense. But now there are so many chains that can process tokenization at lightning speeds and for pretty much nothing. So technological advancement has also enabled RWAs to kick on. But to me, the main reason as to why RWAs are kicking on now is because there are favorable things happening for RWAs at a much higher level. And that's encouraging bigger players to get involved in tokenization of real world assets. And let me break down that a little bit now. So firstly, Blackrock. Now, if you don't know who Blackrock are, that's the problem you've got. I'm not going to explain in this video. You must be living under an actual rock to not know who they are. But they are filing to create a digital ledger technology shares class for their $150 billion treasury trust fund. This is huge because they're looking to tokenize funds. And tokenization of funds, giving people easier access to funds and things like this is huge. Often when I look at this as well, I think about stocks. It's a long process nowadays, especially if you're like a degen, to go and buy stocks. There's a lot of KYC, there's a lot of AML. It's just a long process. Getting in and out of stocks as well through the traditional methods is time consuming and difficult. Imagine if you could just go and buy Tesla stock, like just go onto a DEX and connect your wallet and buy Tesla stock, and it's backed by real Tesla stock that's being held somewhere, and then it's just mimicking the price of Tesla, and you want to get out, you can just sell it straight into the DEX with ease. How much simpler would that be, especially for kind of the younger generations that are so adapted to blockchain technology and the crypto world? This is going to be so easy for people to use. So tokenization of stocks, I mean, this is such a huge market. the biggest market in the world, stock markets. There's trillions of dollars of value there. Imagine if some of that dollar value was tokenized and brought into crypto. The crypto market cap, total market cap could really run to maybe 20, 30, 40, 50 trillion dollars just on the back of tokenizing sections of the stock market. The next one is Libre. So they announced plan to tokenize 500 million in Telegram debt through its new Telegram bond fund. The fund will be available to accredited investors and used as collateral for on-chain borrowing. Bit of a different use case here. This is to do with tokenizing debt, which again, a very interesting angle, but being able to expand that pool of people that can finance this stuff and benefit from it. Again, a huge use case of why tokenization, the breakdown of tokenization works so well. And finally, we've got Multibank Group. They signed a $3 billion RWA tokenization deal with the UAE-based real estate company, MAG, and blockchain infrastructure provider, Maverick. The deal is touted as the largest RWA tokenization initiative to date. Mentioned property in this video as well. I like the idea of someone wants to go and buy a property, but it's $2 million, but they think the price appreciation could be humongous in the coming years. A very high barrier to entry. You're gonna have to get a mortgage, you find $2 million to go and buy that property. But imagine if you could just buy a token which represents a 1% share in that property. Why wouldn't you do it? If you feel like you're gonna get the appreciation of 10% per year, because that 1% is still gonna appreciate at the 10% return, but it's going to be based on the money that you put down. So tokenization of these very expensive, big real world assets, I think is a humongous use case. This is one that's been played with a little bit, but we haven't seen too much in action. But I feel like with bigger institutions looking to tokenize and tokenization becoming a big part of the future, everything else that we're trying to do to tokenize real world assets will start to come into place and be taken seriously as well. And the point I want to leave you with is that according to various analysts, 10 to 30% of global financial assets could be tokenized by the end of the decade. More forecasts suggest the RWA sector could grow into a $4 to $30 trillion market by 2030. So from my perspective, I'm a big believer in RWAs. We're already seeing a huge scale, like I mentioned earlier on this video, with stablecoins, and it makes so much sense for other assets as well to be tokenized to provide easier access and quicker transactions and efficiency. I think RWAs, again, they're not just going to be a narrative that are in this space and then fade away. It's a part of this space. It's one of the best cases, if not the best use case of this technology. So yeah, RWAs for me are the future, but what I want to know, are they the future for you? Let me know in the comments and I'll see you in the next video.